Hello, traders. Good morning from Chicago. Good afternoon or evening, wherever you are. It's 8:01 a.m. Chicago time on Wednesday, the 2nd of December, 2020. This is episode number 1890. Please give me a sound check. Let me know if my volume is okay. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, let's jump right into the summary sheet. This morning, we're seeing risk off. It's mild. The S&P is off 0.29% currently, 0.33% from from the session close. And is recovering a little bit. This morning, the big piece is ADP. ADP came out and it missed. Came in at 307,000 versus 410,000 jobs. This, of course, front runs the non-farm payroll and unemployment report that is due on Friday, a major release. Along with that, the big news is, of course, the UK approves the Pfizer BioNTech COVID-19 vaccine, and Pfizer is working quickly to get expedited approval for the Eurozone, and essentially the UK becomes the first G7 country to approve the vaccine and to start to deploy it. So that's where that stands. Not much else. We still had yesterday. We had a lot of news and a lot of chatter about the stimulus. The Mnuchin released quite a few comments, and we saw the market kind of whipsaw. We saw some moves that were clearly news-based, and so the trade yesterday was quite murky, and that's quite common for all-time highs. We barely ever make all-time highs, and it's kind of an obvious trade, at least for me, because all-time highs means there's not much to refer to in context, and so very often it just it just kind of whipsaws around. The key elements today that we need to pay attention to, these Fed speakers have been going and going and going. Fed's Quarles and Williams are due at right now. Fed's Harker at 10 Eastern. We get Powell's continued testimony. We get Cushing crude oil inventories at 10:30 Eastern. Fed's Williams again at 1, and the Kaijin Services PMI at 8:45. Currently, the S&P has 175,000. This pre-market summary that is posted on Twitter, as well as the Convergent Head Trader channel, shown here in front of you. This, of course, is published at 7:50 Central, 8:50 Eastern, so it's about 15 minutes old at this point. The overnight volume is 175,000, which is a little on the light side compared to day-to-day expectations, but it's well within what we would consider normal, which is up to 316,000 contracts traded overnight. The overnight range is 23.5, which is also a little light as to compared to the recent past, and we can get up to 52 points and still remain within the normal range. Overnight inventory is 96.8% to the sell side. The overall profile is balanced. So that's the key summary. We're seeing money going into gold a little bit. Gold's still fighting underneath the 1900 level, and is teetering at 1800 back and forth. Silver's a little bit off. We're seeing money flow into slightly into the 10 years, not by much. It's very, very small, just 2 ticks in the futures. And the Eurobond is off as well. If you haven't noticed, the cable actually has had a bit of a climb and it's coming off a little bit today. But there's been a fair amount of movement in currencies recently. So that's where we stand, and that's the summary of what's guiding us today. Here's what we expected based on yesterday's overview and lead into the market. The fact was yesterday that we were opening in a gap up into new all-time highs. The primary scenario is an open auction that dips down and then starts turning higher, pushing towards 36.72 or so. The secondary is a push early on to that same area, 36.72, and then a drop back into the middle and sideways is what was expected. The third scenario is a pop higher, an open test drive down. Was looking for an impulse down, so was looking for a pop-up test drive down, and then a push towards the gap close, but we're keeping the gap open, the gap zone open for the session. What we actually got yesterday was pretty much scenario 2. We had we did have a dip here, but the overall action shows a clear swing high and swing low, giving us an open auction out of range, potentially an open rejection reverse. But overall, we did balance some of that overnight inventory as expected. We expected this push down. Remember, that's why we track the overnight inventory. I don't remember what it was yesterday, but I bet I can find out. Let's jump into Convergent Trading's stream and look at the overnight inventory. And yesterday's overnight inventory as we came into the session was plus 89.5 coming in yesterday with the gap up. So as I talked about in the session, I expect it to come in and dip a little bit to rebalance that. That's just the nature of the market. Really, people come in and the market has pushed quite high as soon as the stocks open, some profit taking. So today, however, we're coming into a very strong, as I said, a very strong short inventory of 96.8%. So with that being said, we popped through. You could have chosen the 63 quarter as the opening swing high. It doesn't matter, but we can see that the market traded on both sides of the open. The open is right here, this green line right here. It should be, I should change that to dots actually. And then we push right into 75.50, put in the initial balance, and then we start to get into the murky period of news-based, these guys, when they're coming out with news, it's usually right after the initial balance or so, usually about 10 o'clock Central, 11 Eastern, and start hitting the wires. And we start to do this thing where we have an impulse down, we have an impulse pullback, continuation, structure, consolidate, beautiful zipper right here. And then it takes off. So now we're looking for a continuation. Does not happen. We get another flush down, another flush up, a flush down, and so on and so forth. And that's the nature of yesterday's trading. It was just very, very whippy. All of it holding the mid of the session. This blue line is the mid. For those of you who wonder what the mid is, the mid is just the middle of the range. It is the range high and the low divided by 2 plus sum them and divide by 2. The initial balance was not broken until later, much later in the session. And then as soon as it's broken, it's retested and boom, we drop. Looks like, did I lose you guys here? Check, check. Did I lose you? You'd think buying fiber service would get you just clean connectivity at home, but I guess home fiber is not the same as office fiber. Anyway, get your fiber, folks. So here's the biggest impulse of the day. The entire morning was spent above the open, was spent mainly above the mid and above VWAP. So the entire morning until this point where we get a lower high, this entire morning is a buy only morning, and then it's right here that completely changes. In fact, for me, it changed quite early. I went from buy only to neutral, which was on point. I explained in the Convergent Trading Head Trader channel why I'm moving to neutral. We had a discussion about it. If you're a Convergent member, please take a moment to listen to yesterday's trade talk that we did at 1 p.m. Eastern. The recording was sent out. Please listen to it. I discuss in detail when you should pass on a trade, why I would pass on further trades, especially at new all-time highs. This is really important stuff that traders really need to know. So check that out if you're a Convergent member. Essentially, we get the biggest rotation down of the day. The biggest rotations yesterday actually were down rotations. So up to this point, the biggest rotation up was 13 points right here, 13 points early on. And then we get this big 14.5 point down rotation, and we go into this up, down, up, down, up, down, up, down. And then we finally get a 14.5 point up rotation, which cancels this out. But then we slam it with a 21 point rotation down. We have an impulse pullback, didn't quite pull back enough, continuation, and then from there we just go into the close. The stance into the close yesterday made it clear to me, and as I posted this in the Head Trader channel, I posted that it is very, I said, the posture, this was at 3:22 p.m., 15 minutes after the pit closed, so that's 4:22. I said the posture of the ES and how it closed leads me to place a much higher likelihood of a continuation lower on the reopen than higher. To me, buyers look exhausted. So this was posted right before the market reopened, the futures market reopened. And then later on, as I was doing homework at 9 in the evening, I said, ES reopened and has fallen 17 points back to 36.45 which was the all-time high from earlier last month, which was tested in yesterday's extended session as well. I expect continuation lower, and we pushed to 42. I'm not sitting here waving my arms saying, look at me, I got this right. But there are many, many signs here that indicate that buyers really struggled to keep prices higher. So that carries us into today's session, or the extended hours. The overnight volume's up to 180,000 now, and you can see that we made a beautiful push overnight, pull back. Remember this price? It's the 45. Okay, pull back, higher high, consolidate into the close, and then we come in and we push new highs. So we have another impulse up, we have a continuation. Okay, so we tested the mid, we have a continuation. This is a 30-minute bar chart, all sessions, and then what we have is a corrective move, and I would expect it back up, which is exactly what it did. That's what the overnight high did. I would expect it back up into the 65 area from yesterday, this low volume node, for a continuation lower, and that's what took place overnight. Again, predicting it, seeing it, talking about it is not the same as executing it. So I'm not taking credit for for seeing this coming because I didn't trade it. If I didn't trade it, what's the point, right? But I'm simply discussing how the market is proceeding. Currently, some of the important things to take into account so far. Completely balanced, beautiful kurtosis, very Gaussian profile. Very, very balanced. Has tested the low. You could see the volume tapers pretty well. Has tested the low. We could see that the overnight point of control and the full session VWAP, full session mid are slightly on top of each other. The mid hasn't extended down yet because we have this quick excess high that has pushed down. But what we see, what we're getting here, and by the way, this is the gap that we left behind yesterday in RTH. This gap remains open until we test across the entire range in the RTH session. But look at what's happened here. What are you noticing? Higher lows, higher lows, higher lows, compressing. Same high, higher lows, higher lows. This is likely to be a fast open. This is likely to be a kind of a push open, so be cautious about that. But what the market is doing currently is one-time framing up in the 30-minute periodicity, and it's doing so and having sold off from the open with practically zero delta. This is a market that is showing lack of interest, but the price action is saying that we are really coiling. So we'll see how this plays out, but to me it looks like it is really set up to push. Also, look at this high. By the way, this stock zone was not put up just now. The stock zone was carried over from yesterday's session, from yesterday, not yesterday, but the extended session, so before yesterday's open. It's carried over and it's held pretty well, and that's basically the bracket that we're stuck in. The brackets we're stuck in are 36.57 down to 36.45. Last week's high is 36.42, and that's the overnight low. Very orderly market. So let's look at all this. I know this is getting long in the tooth, but it's every once in a while we get a market that has structure that is very clear. Here's last week's high, right? So there's the 36.42, which is the overnight low. There's this gap zone right here for the week, which is coinciding with the high volume node of last week. So my expectation is that we, breaking yesterday's low, we are likely to test where? What's your guess? Your guess is 36.27. 36.27 is likely to be tested. Last week's point of control. We're likely to fill the gap here probably today. And that's the bias for today. Pretty good volume yesterday. Range not so hot, but and then we have basically a pin bar at the high. This inverted kind of bar is what's called a pin bar, and it has some. I'm not a candlestick reader, but it has some bearish expectations or implications, and not only that, but from a volume profile or market profile perspective, that wick there shows an excess higher, the market rejecting that high. So to me, yes, I'm bearish coming into today's session. We'll see. Keep an open mind, but overall, I'm quite bearish coming into today's session. Here's the thing, though, as we come into this play. If we don't hold the 27, then we're looking at the 08. If we don't get the 08, then we're looking for the low volume node at 35.84. But the big target is where? 35.57. The point of control of this entire region becomes the magnet. This black line becomes the big magnet. Are you getting this? This is important stuff here. Keep the big picture in mind. Of course, trade in your 1 minute time frame, whatever it is. But keep the big picture in mind. I'm not going to get into the order flow. It's not important this morning. But let's dig in because this is getting very, very long. I apologize. It's really a tough thing to keep these short. No, I'm not exactly a perma bear. I'm a perma neutral. I'm a perma, just give me the move. Um, so here's where we are. I know you're kidding. So here's where we are. We're at 36.48. We're trading down here right now. I'm looking at an open auction. So we're breaching that one-time framing up now, which I was hoping it wouldn't do. Remember, it held this high. Look, short term, it held this high with higher lows, and it is likely to squeeze, and give us a quick move on the open. It looks like the quick move is about to happen here. Unfortunately, I was hoping to start up here and say it might push up, and then I'm looking for a squeeze down. I'm looking for a push up on the open to bounce that very, very short inventory. I'm looking for an impulse down, consolidate near this 45 and 42 area, and start walking down into the 32. Consolidate down here, and I'm looking for it to bounce out at 36.29 MC point of control from last Wednesday or last Tuesday. This is what I'm looking for today. There's a chance that it might continue lower into the 27 that we talked about from last week, the MC point of control for the entire week last week. That's actually below us. And then potentially continue down into the big range of the week before. So this is kind of the one-time framing on the daily coming to an end and the market flushing out. So the primary scenario is bearish this morning. Look, I'm not married to it. It doesn't mean I'm going to sell at the open. This is not a recommendation to trade or a trade plan for you, but this is my perspective. The secondary is an open auction that squeezes down, pushes lower, starts to fill the gap, and then bounces back up once it finds buyers, which we often do. Bounces back up, consolidates back towards the open, towards the overnight point of control, and pushes, squeezes towards the 57 and pokes at the 36.60 close from yesterday. Okay, and then hold steady here. So what we have with this scenario is a lower low, and it triggers off the one-time framing down after all-time highs, but it doesn't quite have the energy to fill the gap and continue lower. Okay, so I'm going to leave you with that. We're opening out of balance here, right at the bottom of yesterday's range. There should be a third scenario here to talk about, but I'm out of time. Good luck, and hopefully you're getting value from this, and it's helping you form your own plans. If you want to continue the discussion, of course, join me at convergenttrading.com. It's well worth it. In my opinion, not because out of conflict of interest, but the idea is to continue to stay connected to the market throughout your career by having serious traders, professionals, kind of talk it out with you. We're all there to help each other out. Good luck, and I'll catch you tomorrow morning. Take care.